there's so much here to want to run your business the right way,
right,
above and beyond, hey, let's not miss some advantageous cost of capital and pay more in interest rate or get lower leverage just because I'm not feeling out the market.
All right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito. We have a special guest today, Tim Milazzo. How are we doing today, Tim?
Hey, Aaron, doing great. How are you?
Excellent, my friend. Thanks for coming on here. I wanted to have you on the podcast today because you're not just your normal banker or lender. You're actually developing a technology and really improving a space, which is the borrowing space. I borrow capital to buy real estate. I work with different banks, and they're not all created equal. Any savvy investor needs to shop around for the best cost of money, the best bank for their needs, just like you shop around for a piece of real estate. So talk to me more about what you do and what your company does to help investors like us.
Yes. Thanks so much for having me on, Aaron. Really appreciate everything you're doing, educating real estate investors of various stages. You can think of me as a financing guy from New Jersey, and you wouldn't be wrong. You can also think of me as a tech entrepreneur, and you won't be wrong either. So my story is that we're bringing a platform to market in commercial real estate financing, which newer investors may expect, hey, this is the way financing should work, right? Like you can go to a portal and you can see what different financing options are available and, choose the best lender based on the interest rate and the terms and, what other borrowers have said about the experience working with those. You may think that exists in commercial real estate if you're just getting in. And those that have been in here for a while know, no, that actually has not existed in our industry. Like this is like an offline process where you have to develop these relationships and it's really hard to find the right lender. We're trying to bring this common sense innovation to commercial real estate finance, which is transparency about financing options, learn about what you're getting into before you have to sign up with a lender.
No, I love that because it is right now I'm buying a primary residence. And of course I buy about 3 apartment buildings a year. So I'm dealing with, kind of regular primary loans, although the way I pay myself, I actually don't qualify for your average FHA loan. I'm a harder guy to underwrite. Banks don't like me. I pay myself.
You and me both, Aaron. You and me both.
Oh my gosh. Boy, I pay myself to refinance a real estate. I'm like, come on, the money's coming in. They're like, well, that's debt. I'm like, no, that's money in my bank account, my friend, based on solid assets. Never mind. It's a whole other podcast. But so the way you qualify for a residential loan is completely different than how you qualify for a commercial loan. Yeah. I am amazed sometimes the banks that give us commercial loans with many zeros behind them, based on the assets, based on our relationship, based on our real estate owned and our track record as investors and borrowers. It's very complicated. It's very relationship based. And it took a while to get here and actually qualify for those loans. And so explain to me a little bit more how you make it easier for a guy like me to get commercial loans.
Yeah, absolutely. So first of all, it is a great thing to have strong relationships with lenders that you've done business with. That's a great signal because that means that you've done the right thing as a borrower and you haven't gone wrong. Also, working with a lender and knowing that they're going to hold up their end of the bargain. They're not going to retrade you at the last minute. They're not going to cut loan proceeds. They're not going to screw you over when you're doing a deal. That's a great thing. But there are hundreds or thousands of lenders, commercial mortgage lenders out there. You may be doing a different sort of deal in a different spot of a different size. You may be tapped out with your local bank because they can only lend, so much to so many people, and then they need to diversify. There are so many reasons where you may be looking for your next lender, or you just want to see, hey, I trust this guy and I can take this loan at this leverage and this interest rate, but is there something better out there? You should always be looking for your next source of capital as a real estate investor, whether you're brand new, whether you're scaling. And heck, the biggest real estate funds don't always work with one lender. They are constantly making the lenders compete for their business. And that's the only way to keep it honest. And that's the only way to get market rate financing. The best the market can offer you time after time is let the market make you offers. And we facilitate offers for debt financing in the easiest way so far for this industry. You enter information about the loan you're seeking and the property address, and we're not reinventing underwriting. We're making it so that multiple lenders can compete for your business without you doing extra work. And we make it easy for the lenders as well. That's the role of our platform, StackSource. We make it easy for both the borrowers and the lenders, so the market gets a little bit more efficient. An efficient market means better cost of capital for borrowers.
Oh, absolutely, absolutely, and that's the name of invested properly as well, is making sure that your cost of money is not overriding the value of the deal. You know, I meet a lot of investors in this business who are really great at sourcing deals, keeping their costs down on construction, working with management companies to get a property leased up properly. And, you know, they'll go to Home Depot and they'll shop around, they'll save 98 cents on this and that. And I agree it's important to keep your costs down and keep a well-run, tight-knit business, as we try to do every day, Seth Martinez and I. But then it comes to money. And a lot of these guys, you know, I'm like, well, what are you paying for? They're 18% or something. I'm like, my buddy gave me a loan and I'm just going to give him back. Like, he gave me 100 grand. I'm going to give him back 150 at the end of the year. I'm like, that's illegal, actually, the amount of interest you're paying. Or, you know, I run into people all the time and they're just like, well, I don't want to deal with a bank, or I don't want to deal with this or that, or I don't know. I applied to one bank and they turned me down, and it's just a way. And they're paying out the wazoo for capital. And I'm like, well, how's your credit score? Like, good. How's your income? Like, okay. And like, well, you know, you can get much cheaper money. And the process is daunting. It's expensive, right? There's costs sometimes. And so is there a fee to sign up and apply on your site, or how does that work for the borrower?
Yeah, typically no, there's and never is there a fee on the front end. So the way StackSource works is very similar in business model and in fees to the way it would be working with a traditional commercial mortgage broker. A couple of differences, but that model is we take a small percentage of the loan as an origination fee at closing. We're getting paid out of the loan proceeds. You're not cutting a check to StackSource to start the process for you or anything like that. We are a little bit different than a traditional commercial mortgage broker in a couple ways. One is on the fee side. I don't know if you know this, Aaron, or if you do and you're savvy enough, I don't know if all your listeners would know this, but in residential real estate, it's illegal for a mortgage broker to say, get an extra fee under the table from the lender. Mm-hmm. But in commercial real estate and commercial mortgage brokerage, it is not illegal. And it happens to be common, so that your mortgage broker that's supposed to be going out to market and getting you the best loan, they may be bringing you the loan where the lender's kicking them a little something. And that is something that we never do at StackSource. So we have a transparency, we have a StackSource guarantee that we show you every fee that will be associated with the loan, the lender's origination fee, StackSource's origination fee, and we're not hiding fees. And you can actually hide fees inside the interest rate. So you're getting the best rate at StackSource because we're not hiding an extra fee inside the interest rate. The other way that we're different is we have this portal. So real estate investors are clicking get a loan on our website, or they're using one of our tools for loading up loan quotes on listing platforms. And you're getting access to multiple financing options and seeing what lenders are potentially a match for your deal. And then you can see those lenders making you offers, which you can compare and analyze in our platform. So there's a speed and a transparency to this that we're really trying to push to put everything in the borrower's favor. And putting everything in the borrower's favor is lenders actually like that we're more efficient and we give them a clean package immediately. And so lenders love it as well, but we're on the borrower's side and we're unapologetic about it.
No, I like that. That's great, because I do feel like a lot of times the mortgage broker, like, we get it, that we know they're getting fees here and there that aren't disclosed in the commercial side of the business. And, you know, I don't really mind that if people are making money, but at the end of the day, it doesn't seem to work out to my best interest. And we like our relationships with certain brokers, and we're big with a couple banks that have worked well for us. But I would say it's pretty uncommon for us to borrow from the same bank more than twice. You know, they're really, because they change their terms, they change how bullish they are on certain areas and things like that. And then just other banks pop up with far better terms, you know, and more aggressive terms. So I love this. You know, this type of technology is very popular these days. It kind of reminds me a little bit of like Zillow in a way. Like, you used to need to call up a realtor and get the big book to look at real estate years ago. Now, you know, you go on Zillow now, and that's really how you find your real estate, is the residential place. Or, you know, even just like with buying a car, there's like kind of similar structures like this, right? And so this makes a lot of sense. This structure has worked in other industries. it sounds like, and I guess there are competitors in the residential space doing something similar to this. But then, I don't know, like I'm sure there's plenty of them out there, but in the commercial space, I don't really know of anyone else doing this. I mean, obviously I don't want you to name your competitors here, like, am I off there? Are you kind of one of
well, let me say, you're absolutely right that industry after industry, there are a couple of things, like, it's not just about the fact that you can click a button. That's not the magic here, right? Because, we've all grown up with technology now, and certainly the next generation, they're going to expect that you can click a button and make things happen. Some of the magic, a lot of the magic is in feedback loops. If you think about Uber, if it's the exact same price as a taxi, like, you're going to care about a couple things. Like, first of all, which one's going to get to me first? Is it going to be the taxi or the Uber? It's not just, oh, I like clicking a button. No, that's not it. Is it going to get to you faster? Is it going to be more reliable? And then, like, the ratings of the drivers, like, can I tell Uber whether I'm having a good rating or a bad rating? And, you can get in a taxi, and that taxi could be a really bad experience. He's going to be like, braking really hard, and you're going to feel sick in the back seat. And, it's going to be loud on the phone, and you could have a bad experience, but you could never know because there's no ratings, there's no feedback loop. These people are not kept accountable. So there's something to it, keeping the industry accountable and the players of the industry accountable. Keeping lenders accountable is really important. In residential mortgage, the most valuable company now is Rocket Mortgage. They're worth $50 billion because they brought the process online. They made the closing and the underwriting a little bit less painful. They shaved days off the process. And shaving days off the process is one of these things that can make your real estate investing business more effective, and you can win more deals because, the brokers now know that you can close. I mean, there's so much here to want to run your business the right way,
right?
Above and beyond, hey, let's not miss some advantageous cost of capital and pay more in interest rate or get lower leverage just because I'm not feeling out the market.
Actually, Rocket Mortgage was exactly what came to mind as far as a comparable system in the residential space. And you see them everywhere. They really came in and took over a lot of market share. In fact, I was kind of curious. I actually ended up applying on their site because I thought maybe they had something that other brokers didn't, but they ended up being just the same. Like, if you don't fit in the box, you don't fit in the box, but yes, that's, if it worked for them, right? I mean, then the commercial space is even larger. The loan sizes are much larger. So therefore the potential here with this business could be much larger. How long have you guys been around?
So we launched in 2017. The team at that time was me and 2 software engineers with a prototype that was like duct taped together, like barely working. We like barely had any lenders on the platform to start. Fast forward to 2021, and we've got hundreds of lenders active on our platform. And in commercial, you're right with Rocket Mortgage, by the way. It's like there are like 2 or 3 or 4 different loan programs that you may get it from a different lender, and like the pricing may be slightly different, but there's only a few different underwriting boxes. In commercial, when you have hundreds of lenders, they all have a different underwriting box.
Yeah.
And it can vary quarter to quarter. Like, some regional bank that you love working with, their credit committee, not your loan officer. Usually if something goes wrong with the bank, it may not be your loan officer's fault. It's usually not. There's a credit committee. There's a chief credit officer and his committee that decides we're overexposed in multifamily. We need more of these types of properties, or we need properties in that county. You don't know how their credit box may be changing. Yeah. And so, now I would say our platform's like vastly more powerful and valuable than it was when we were starting in 2017, because we represent all these hundreds of different lenders, their different credit boxes and different leverage points and all of this. 2017, me and a couple software engineers with a dream, launched this thing, started getting some small loans in the middle of nowhere done where brokers weren't helping people anyway. And we've really built up from there.
Yeah, that's interesting too, because you go out to some of these rural markets. I, for one, invest in Southern Vermont as a rural market here. It is hard to get the right banking relationships in place. I'd say I tried maybe 15 different banks and ended up with one credit union that was able to service me very nicely. But it was not easy getting here. And if we didn't have a $17 million portfolio behind us and a 10-year track record, I don't think I would have gotten it.
Would have been even harder. Yeah, it would have been even harder. We're working on our first loan in North Dakota right now. At this point, we are very much nationwide. We've closed loans in like 34 different states. But the further out you go from the city centers, you're going to find that number of calls that you need to make to find a lender, just a lender that's going to give you a good term sheet, it's going to increase and it's going to multiply. So we heard from another client that they called 41 different institutions before coming to StackSource, and we had the term sheet within a week. Because you just don't, we have at this point north of 20 professionals working at StackSource, and it's all we do full time. We're not looking for deals. We are not, competing on, trying to syndicate equity. We're just looking at financing and talking to lenders all day, every day. And we talk to 900 lenders now, and you can make calls, but you're not going to make 900 calls and get all the same lenders that we have, nor should you. I mean, that's not the best use of time for a real estate investor. You should be going and getting more equity. You should be going and finding more deals, and you shouldn't be making 900 calls to lenders.
Now, when should I go to StackSource and start the process? Like, let's say I'm shopping around for a deal. I don't quite have it under contract yet. Should I go on and fill out an application? Can I even do that yet without a property, or how would that work?
It'll depend a little bit on the type of deal. If you're talking about ground up construction, for instance, we'd love to chat early and talk about the underwriting and start to figure out whether that underwriting makes sense, but it's going to be a long process. You need to get to a point where, you're going to take away a lot of risk on the deal and the entitlements and the construction permits before a lender is going to commit to you. On an acquisition deal, light value add, or certainly stabilized. I'll answer stabilized next. If you've got a stabilized deal, multifamily, it's 90+% occupied. If it's going to have a loan of at least $1 million on it, we can give you an instant quote. And that is where, like, Rocket Mortgage and Better Mortgage, they can give you an instant quote online. We can do that for a 90% occupied multifamily where you just want a current underwriting, you want a non-recourse loan. And we do that with like the credit box of Freddie Mac small balance loans, and we can instant quote that product. When you're talking about, well, I'm not going with the agency route, I'm not going to go with a Freddie, instant quote here. Usually you want to have an accepted offer, or you want to be in like a best in final with a broker. Because if you're just underwriting a deal and you're going to underwrite like 20 more deals before you finally get one under contract, you're going to burn your credibility. And we don't want to see you do that. Like asking lenders for quotes over and over. You should come to your StackSource capital advisor, as a matter of fact, and chat about financing strategy for all 20 that you're looking at, rather than, hey, I'm going to come back to you 3 times a week for different quotes on all of these. And the lenders will start to see, oh, it's this guy wasting our time and we're not going to respond. You should talk about strategy for all 20 and what loan programs are available. When you start to hone in on an accepted offer, that's when you're going to get live quotes from multiple lenders that will actually compete for that particular acquisition financing.
Wow, that's amazing. So you can even, if you're working closely with StackSource, you can even actually run some ideas by you, get a little bit of guidance from your group there, and have someone kind of advise you a little bit on the right strategy to get the mortgage. That's very impressive. That's a nice service you put out there. I really like that.
I think every single real estate investor should have that kind of conversation with somebody. A capital advisor at StackSource would be someone you can have that conversation with that's an expert. They've been lenders, they've been mortgage brokers, they're working on financing every day. If it's not us, talk to an experienced real estate investor that's doing more deals than you. Talk to one of your relationship lenders about what they're seeing. If you're not doing that a few times a year, you're doing yourself a disservice, because you're going to have old financing assumptions in your pro forma Excel that's sitting on your computer, and it's going to have 6 months ago capital markets assumptions when the market may have shifted. Treasury rates may be different. What the Federal Reserve said a couple of weeks ago is going to impact this. How healthy is the mortgage-backed security market? These are things that a financier will know. And you can talk strategy with them, and nobody's going to get, as a matter of fact, they're going to love hearing from you, every couple of months, a few times a year, to talk strategy. And then especially when you come back with your deal, you've already talked about the basics of where the market is. And then it becomes about, okay, let's maximize and let's execute on this one.
Yeah. Now, what's the minimum loan amount? What's your maximum loan amount?
we have no minimum loan amount per se. If you're doing, now if you're a couple of things we can't do, we cannot finance multifamily that's less than 5 units. So if it's a duplex, unfortunately, we can't help. You need to be 5 units or more to be in commercial mortgage territory. You
Right.
technically can get a commercial mortgage for less than 5 units, but we can't do it. We're not, residential mortgage brokers, and we're not going to touch it. If you're doing the very smallest commercial deals at like $100,000 and $200,000, value of the building, that becomes difficult too. If you really need the guidance and the help, we'd set up a situation where there's a minimum fee we're charging, because the 1% fee on a, 100 grand is not going to, and it's also harder to find a lender that's going to underwrite that well. So we're going to have to negotiate and roll up our sleeves and make our lender relationships do a favor. And for that reason, there's a minimum fee for the smallest deals. But we have done deals as small as $250,000, but you're paying more than 1% of that.
Yeah, understandable. And then on the maximum size, I guess really sky's the limit. Depends on the lender and the borrower, and the deal, of course. And
no maximum per se either. The largest loan that we have done so far this year was a $58 million construction loan for a new student housing tower in Texas.
Very exciting.
And so, it's the sky is the limit in real estate. And, in the middle market where, there are some of these like large towers in like, cities, it's still advantageous to go and check that you have the best market financing. Those people we find sometimes they want to get through the advice type of conversation much more quickly. It's like, all right, guys, we know this, we've done 100 loans. Who do you have for me today? What capital sources out there that I don't know about today? That ends up becoming the conversation with these $60 million loans.
Yeah, I like those clients, the real experienced ones. When I got on the phone with the guys, they're like, "Yeah, I've been buying real estate my whole life. I own as much as you own. What do you got?" I'm like, "Okay."
Yeah. What do you got?
That's my type of guy. All right, very cool, Tim. So, how can people connect with you and learn more about you and apply for a loan, possibly?
Yeah. So StackSource.com is our website. My email address, if you'd like to reach me directly, is tim@StackSource.com, tim@StackSource.com. Tim Milazzo, search that on LinkedIn, Facebook, or Twitter, and I will be the first one up. But StackSource.com should be a good hub, to start, or even to just read our blog about what's happening in the financing market.
Very cool. Very cool. I'm going to talk to my business partner about this, and we're buying about 3 to 4 apartment buildings a year. So I pay broker fees all the time, and I enjoy the process and the service, but it sounds like I might get a little more bang for my buck when I'm working for you here. So working with you. So we'll definitely consider going to StackSource.com and filling out an application. And I think we're going to possibly do some business together.
Aaron, as two Jersey guys that both, as we were talking before, lived in the same town in New Jersey looking over New York, we should get together and maybe do some business, and hopefully somebody learned something here just about financing and the need to find the best financing. Let's maximize some returns.
Absolutely. Absolutely, my friend. All right. Thank goodness for Jersey. It gets a bad rap, but I'll tell you, it's a nice place, Some
of the people are very, very nice.
Some of them are. All right. Thank you so much, Tim, for your time. And thank you, listeners, for tuning into the Passive Cash Flow podcast brought to you by People's Capital Group. And you can learn more about investing in real estate with People's Capital Group at our website, peoplescapitalgroup.com. And there we buy apartment buildings all the time with passive investors. We have in-house management, podcast that comes out every 2 weeks, webinars every month. So take advantage of our free education, our content there, and see if what we do is a fit for your investment goals at peoplescapitalgroup.com. Thanks a lot, Tim.
Thanks, Aaron.